Hello guys, welcome to a Train Parrot and to another episode of the Sunday Alpha. This is the only video and the only channel that you need to watch to stay informed, to know what's upcoming in the next week with the market open, general markets, altcoins, dominance and all of that. We are also gonna summarize what happened, what stand out during the previous week, including some news, the Genius bill, we're gonna cover that as well, stable coins, the distribution ongoing, I'll give you an update on that too. Ethereum really becoming the spotlight this week. It is a weekend, so there is going to be less volume in the order books, but despite that, I'll show you everything that is changing so we don't miss any of those orders, what the whales are potentially preparing for Monday with CME gaps and all of that. And don't forget that despite the fact that this video is typically on Sunday Alpha, the longest one of the week, there's always in all my videos timestamps in the description so you can scroll and have a look at what you care and just watch that, or watch it in two chunks. If your wife or husband is interrupting you in the best time of the day, you can always take where you left off. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. And that like and that comment really helps this video stand out against all the other crap that is coming out from crypto channels. They're just trying to sell you your bags. You are here for data-driven decisions, whether it's investment, swing trading, daily trading, we got you covered. The interest over time on Bitcoin was starting to take some speed in here, but now we are coming back down. And I see some crypto Twitter accounts mourning that the attention again has de-inflated, and that is with the price 4% below the all-time highs. You can see as well how this move up on the altcoins went all the way to 60 and now it's coming back to 27, less than half. Of course, it's not a settled candle, and possibly over the weekend people lost interest, but I remember the days where the weekend was kind of a party of trading and everybody was constantly tweeting their positions, their wins, their losses. Now it's quiet as a cemetery. And I really want to cover the Genius Act. This is going to be probably a couple of minutes where I want to highlight the pros, the cons for US, for the rest of the world, and some speculation that's going on out there, whether this is really with the intentions that they are selling us, or if it's that they're trying to pass something under the carpet, something that no one wants. Let's have a look. The pros for US, very quickly. Of course, regulatory clarity, that's something great and amazing. We all want that. Consumer protection, absolutely. There's so many scams, so many things. So far, crypto is like being in The Walking Dead. You know, you never know when something is gonna appear, is gonna scam you. Yesterday I was checking my wallet and there are transactions going out of my wallet and I was, what the hell is going on? And apparently there was a contract with 1 inch that was still approved, and somehow these MFs managed to put in the blockchain transactions coming out of my wallet without me approving them. It's really scary sometimes. So I hope this is gonna help with all of that in a way. Innovation boost, that is also great. US dollar dominance, well, I guess this is a side effect that they want to pursue. By regulating USD pegged stablecoins, the act could reinforce the dollar's global financial role. Economic growth, yep, that is all good for the US. In terms of the cons for the US, weak consumer protections. There are some critics, including Elizabeth Warren, arguing that the act lacks robust safeguards. Fair enough. Conflict of interest, concerns over the President Trump's ties to World Liberty Financial. Some people are thinking that this is just because he wants to benefit from this, and this is not my summary, okay? This is coming from a summary on the news using Grok 3. Bankruptcy risks. The act prioritizes stablecoin holders over other creditors, potentially disrupting established bankruptcy laws and settling the stage for taxpayer-funded bailouts. There's some regulatory loopholes and centralized control. So how much of this could bring in controls? And I guess that is my main spotlight of concerns, if you ask me. In terms of global impact, we have some pros and some cons. cons: mainstream adoption, USD influence, and market stability is part of the pros, and the cons are financial instability risks, regulatory fragmentation, because now we're going to have this particular act defending certain things and other countries are going completely the opposite, foreign influence concerns, and money laundering risks. But I want to deepen in the area that I care the most. Is this act in any way a proxy into CBDCs? And there are a fair amount of accounts currently on X that are claiming that they are rebranding the CBDCs into a less ominous sounding stablecoin. And I kind of woke up this morning thinking, well, it could be the case, right? Of course, not everybody is agreeing with this idea. Personally, when I see MasterCard, USDC, BlackRock, and all the usual suspects very excited about any new regulation, any new act, bill, I tend to get a bit suspicious of what's going on really. And they are really excited. They are saying that they are enabling faster, lower cost cross-border payments. From the point of view of technology, that is fantastic, right? MasterCard is a dinosaur and it needs to die. We need to replace it. So this is a use case of the stable coins with two ends: MasterCard, banking, and the all regulated institutions controlling both ends with KYC and all of that. Of course, it's not anonymous. No way. It doesn't inherit the principles of crypto. They are only interested in the tech and the fuss that this has brought. They want the goodies, but they want to still keep all the control. So that is an obvious one. And that's how you get US now and UK potentially collaborating in a sandbox for crypto and tokenized assets. We're talking about real world assets, stable coins, DeFi, full focus on that. It's a trade-off. You're going to get fully control, all eyes on you, all eyes on your wallet, all eyes on everything that you do. But then you get as well to pay Uber with CBDCs. Sorry, stable coins. Well, they're the same now, right? Coinbase CEO Brian Armstrong says signing the Genius Act into law will be the official start of the financial revolution in the US. Yeah, that's it. Tether plans to bring USDT to the US under the Genius Act and launch a new US-based stablecoins. Billions of fresh liquidity could soon flow into Bitcoin. Of course, he needs to say something that sounds bullish. That's the way that you get all these views and blah, blah, blah. But bringing USDT into US means regulating it, controlling it on each end, putting cameras, surveillance, and all of that, and things that don't adhere to what they perceived as properly done gets cancelled in a centralized way. I guess that is the main point. Okay, let's move on. After all, this is supposed to be alpha. I still consider that alpha, by the way, not as technical as usual in this channel, but let me know in the comments if you are interested in that topic, or you are part of the we are screwed anyways, let's just move on back into trading, or you really don't care about stable coins. I care because I want to take profits and I want to park my profits somewhere that I perceived as the usual crypto. Anyways, we have here a bull flag coming into Bitcoin. You can see that it's a symmetrical one and it's a sign of continuation to the upside. So you could easily place here a measurement from high to low at the base of the flag and extend it from the middle and say if we get a breakout from here, we can easily get into 130K. And I guess many people want to know if we are about to get that continuation into level 2 or level 3 or even into a top information. By the way, this 1 to 3 is just mimicking 1 to 3 in here. It's just past performance. I'm not saying that has to play out like that, but we keep our eyes, we leave it in here, we look at it all the time to see whether we feel is doable. After all, if we hit number 2, we get a deep, sharp decline in liquidity pools, as you can see in here. So getting into 2 starts getting less likely and less likely. That was exactly the case with 1, 2, and 3 in here. Although 2 was a little bit more similar in terms of sizing of the pools relative to 1, but 3 was a sharp decline, and still the price managed to cross 3 and then start to form bearish divergences, double tops, top information. transactions. And notice that quietly the CBBI, this index that aggregates on-chain metrics with technical analysis from 0 to 100, now we are at 82 and we are reaching the highest we've been in this cycle, which I think is 83 if I remember right. Yeah, 83. So we are 1 point below the highest we've been in this cycle. Of course, the model says that we should be topping at 99. Here we top at 100. Here we top at 97. So we should get a little bit higher in here. That doesn't necessarily mean from this price. You can take a pullback and go later in October, November. Give some room. Don't assume that it's just up only when it comes to profit taking or protecting your swing trade or your long-term holding that you are eventually planning to distribute. If you are thinking, I'm just going to hold it until I die, okay, go on, do that. But in this channel, we focus on how we can take the best value. We live outside the idea of just buying and holding even during the bear market. And as I say, Ethereum is taking the spotlight, and you can see here in the monthly chart, as we saw during the week, I presented this chart. Now I see it all over the place in Twitter, so I didn't copy it from anybody. This is the support. This is the liquidity hand that we reclaim with this green candle that was extremely bullish against that resistance of 2.5. We managed to break to the upside, and now we are hitting 3.7k. The resistance on the weekly is at around 61.88 on the RSI monthly. That coincides with 3983. So keep that number in mind in case you think that we are gonna respect that all-time resistance trend line, or if you think we are gonna break out from here, well, watch out and hold on tight as we face that resistance incoming. After all, in here 4k is also aligned with that. In 4k we hit it 3 times and we failed. There are other assets in history. I think Nasdaq and S&P have done that pattern of a triple top, and then you come to the scene of the crime, and on the 4th time you manage to do it. We got an extension of 104.6 that gives you the same performance of all this leg, but from this low into 4.6, and it reaches the previous highest monthly close from the previous cycle. The extension of Golden Pocket gives us around 6.6k, which is a little bit more in line with my ratio for performance on Ethereum versus Bitcoin for this cycle, which is 0.05. That gives you from 100k a target of 5k. If Bitcoin gets into 200k, well, you get 10k in Ethereum. You get the point. Since Bitcoin is around now 120 something, and I'm speculating that our next leg should get into 130, well, that gives you around 6 point something k on Ethereum as well. If you've been living under a rock this week, do not worry, you missed this thing. And I think this is the biggest thing that is currently going on. We got a combination of very old wallets that have moved the coins. Some of that went into exchanges. Some of that just moved from one wallet to another. And we're talking about around 100k Bitcoin. Throughout the whole week, we've been seeing moves of $500 million, $2 billion. It's just nuts. Some outflows as well happen for 1.5 billion, but it's not really compensating for all the inflows, and that is starting to get a little bit sketchy. It happens all the time when we are very close to all-time highs in a topping year of a cycle, so that you should consider it something typical. But the magnitude, the sizes of those moves, and the age of the wallets that are moving that, together with us being currently in a miner's capitulation. Think about this. We know that miners have reduced their hash rate. That means they are in stress. Point 2, we know that they have moved over 80,000 from all potential miner wallets from 2011, okay? So we know they need that cash. It is really weird, and people are really confused out there. How can we be in a miner's capitulation with a price of Bitcoin 4% below an all-time high? I'll tell you how. Price being very high is good for the miners. Of course, they are paid in Bitcoin, and if Bitcoin is priced expensive, believe they're making more money. But on the other hand, they have very high bills to pay on electricity, and two, no one is then using the network. The Bitcoin network is dead. There are no retails. No one moves a fucking Bitcoin, okay? So keep an eye on that. Yeah, it's fantastic. Finally, you have all the ETFs buying Bitcoin. Everybody wants to own Bitcoin. Everybody wants to speculate Bitcoin, but no one wants to use it in the way that was designed for, okay? And it was designed in such a way that when you get these bull markets, retail is here transacting Bitcoin in the network, so the miners are paid. Now, BlackRock is making money from fees, from contracts, right? They are thinking, we are so clever. We took over the miners. Now we make the money, and the money comes into our pockets. We don't even need Bitcoin to move at all. But let me tell you what, Bitcoin needs to move. It needs to move. The network needs to produce fees. With those fees, with those spike in fees during the bull market, the miners fill their ARCs with cash to survive in the bear market. But if this bull market, they don't make a shit of money, what are they gonna do in the bear market? I'll tell you what, sell Bitcoin, okay? So keep an eye on that. Right, and enough with that, and reminded that this week I cover the top bottom weekly indicator. This is a free indicator and it tracks the Bitcoin volatility. And I found this indicator 4 years ago and it's still working. I didn't find it, I built it. I found it for 1 year that I wasn't using it and I noticed that it's still working. So I started using it again. And we're approaching that level of resistance of 0.3, which is priced at around 130K if we move straight up from here. If we don't, if we do some pullbacks, that 130 might increase into 140 or 150. So we got a moving target, but if the volatility continues to spike up with the price, we're gonna hit that ceiling that we have never broken in the history of Bitcoin. Let's carry on. I got a lot of things to cover today. Put pause, go and grab a beer, tell your family to FO and touch some grass. You got some very important charts to look at. We got the SOPR spike this week, okay? We enter into the red. We did that 3 times in this area. We did this 3 times in this rally. That means that people are taking profits in the green. They're not selling at a loss, and that is closer to a local top than it is to a local bottom. That is what it means. So we just got one, okay? We could get 2 more, possibly, and we can carry on going higher. But every time that you get that red, it's a red warning. People took profits and you didn't, okay? If they take too much profits, things collapse. It's as simple as that. The realized profit and loss ratio is another one to track. You're going to get big profit taking in the bull market as you go up. The profit taking is going to start declining, but the price is going to start going higher. And at some point, that is not going to allow the price to continue up because just too many people took profits. It's as simple as that. It's just math. In here, in this area, we got the highest profit taking so far, according to this ratio, and we're getting some spikes in here. The first one was on this new all-time high, and we got another spike this week, and it's declining. So you cannot use these things by itself. This is not a single indicator to master all, but it's another data point to keep in mind. We also have the Bitcoin futures power 30 days rolling window, and you can see how high it gets in areas where we get local tops. In here we got into 0.17. In here we got into 0.20, but in the recent highs it's more humble. It's getting just to around 0.11, and now we are back again into 0.13. So it's becoming a little bit hotter. Another data point. The funding rates using percentiles is magnificent because every time this cycle that we reach the 50%, that is a buy the dip area. At the moment we are reaching around 65.6 in the percentile. The last time we put a local top, we were at 67, so it's starting to hit up. Notice as well that on the tops of a topping year in the cycle, you get percentiles that are very close to 99 to 100, and then eventually those percentiles start declining, producing a bearish divergence that eventually marks the final top of the cycle. So you get 99, then you get 92, and then sharply declining into the low end of the percentile. This is already declining from 94 to 89. Last time it was 68, and now we are at 64. So we could break out from that and make an 80. Sure, we can do that, but I don't think we're gonna get into the 94s or 99s once again, just like we did in this topping year. Long-term holders this week have been busy starting with their distribution. They don't distribute in a one go, they DCA out. So they start the activity of the distribution that typically lasts all the leg up. So you see them selling, you know they are selling, they like this price to start to distribute. You just don't know when the price is really gonna top. Sometimes it tops once they reach the zero line and you get a local top. Sometimes it needs to get really into strong distribution. In this area, we cannot say we are in official distribution, but things are starting to flip in that direction. Notice that the second all-time high in 2021 only reached the zero line before marking that all-time high. It didn't get into fully distribution because the full distribution, the strong distribution, happened on the first top, not on the second one. Why is that? Because the second one was driven by derivatives. It was driven by futures, and the futures positions took profits, and that was it. There was not much to distribute in here in terms of coins. And in terms of liquidations dominance, we are in a period of shorts being liquidated, and we are approaching a level that is about to mark the highest level of distribution in the whole cycle. In the early part of the bull market, we got a reading of minus 24. That's how many people we liquidated, moving from 15K into 25K in early bull market, because people were thinking, no, we are not going into a bull market yet. We need to hit 10K or 6K. Those were the bets of the best channels in YouTube. I was buying my ass on Bitcoin here, really. Now we are at minus 22.6, so getting really close to that in terms of shorts being liquidated. We have liquidated a lot of people, and you can confirm that with this, right? So that was a huge amount. I could say that this is 3 times larger than bucket 2. So there is 1/4 left if we go to bucket 2, and there will be like 5% left if we go to bucket 3. That shows you how many people got liquidated already. Liquidating people is not the only motivation to go up when it comes to shorts, but it's definitely something that market maker needs to do all the time. In the previous cycle, you can see that we have a move in here to minus 13 in terms of liquidating people, and that was the top of the second move up into 69. Just for reference, we are still dominated by net taker volume, benefiting the longs. So the longs are still here in control, entering market orders like crazy, speculating for higher prices. And for as long as that remains true, and they're all colluded into just buying any price, the price carries on up. If we see a sharp decline like this, then that is going to start rolling over and put a pullback. So far, this is at the highs still of 162. I haven't seen any pullback yet. And something positive that I wasn't expecting at all to happen today is that we just flipped into spot dominant. What's going on? There is no retail, and suddenly we have a reading in this area that shows this last reading of 117 is spot dominant for the first time. Really weird, and also weird that it didn't start from the lows. The usual is from the lows, spot rescues the dip and triggers a rally, like you can see in this area and in this area and kind of in this area. For example, in here, it was spot dominant at the lows, and that triggered the move up. Now we are at almost all-time highs, and they're just starting to do a spot dominant period. I wonder how long it's gonna remain like that, and I'll keep you updated, of course, in Twitter, Instagram, and in Telegram with all those updates. And the distributions, yes, let's look into Big Well Explorer. Let's see what happened this week. We got 2 readings of over 44,000 Bitcoin and a couple of readings of 13,000. That makes up a total of Bitcoin hitting an actual exchange coming from large holders exclusively. That's what the Big Well Explorer indicator does. And we got just an outflow of 20,000. So if you do the math there, you get over 100K hitting exchanges and only 20K going out of exchanges, giving you roughly 100K that is in the exchange now coming from large holders. Those dudes know what they're doing, right? And they're depositing into exchange, and you really cannot tell if they're gonna sell, when are they gonna sell, or how much they're planning to sell. You just know that there is that big amount there. And there are some huge accounts on Twitter saying, oh, they sold 80,000 and the price didn't move. Who told you that they sold? You don't know that. It's just there sitting in the exchange. I'm absolutely convinced that they sold some of that, but not all of that. Definitely not. There hasn't been that sort of bullish absorption, because to confirm that, you need to see a huge spike in volatility. Every time that we get those deposits, price remains almost intact for a little bit, and then it goes slightly higher, and then you get a big wick down. That is the actual sell. That is the event of the distribution. When the price just carries on slightly higher or sideways, they might distribute a little during that period, but definitely not 80,000 in one go. And even if we get bullish absorption, the bullish absorption still happens within a spike in the volatility. We got the perfect week for inflows on ETFs. Everything is in the positive, huge numbers, both on Bitcoin and Ethereum slightly outpacing those inflows for some days. We are today in the grid at 72, and apart from the 12th of July, we were in the extreme grid. We haven't been in the past few days. Reminder that we are again in a golden cell, warning cell on Cerberus. This tracks all the coins, tracks all the stable coins, and is telling us clearly that we need to be looking for exits at some point. This is the season of look for your exit. This is not the season to look for your entry. You can still make money looking for long entries in here, but the vast majority of people unexperienced that do that without risk management, without looking for a technical entry, data driven and all of that, they just get screwed. If you're a pro, yeah, go for your long. Yeah, you can follow the trend indeed. The trend is your friend and all of that, but you cannot just dump 100K there, go for holidays and come back. This warning cell will make those people regret it. Let's look at the liquidity, let's look at the order book, let's see how things are looking over the weekend. Remember, the caveat is that over the weekend the volume goes very low, so signals, breakdowns, breakouts and all of that, take it with a grain of salt. Many of them turn into the opposite direction. Last weekend I talked about by the end of Sunday having a spike to the upside. We ended up having that. This weekend we are very sideways, as you can see. We have a bit of liquidity here sitting at 113.9, but the defense on the order book is starting to follow with the price to the upside. We started with a defense early this week around 113.5. They move it to 114, 114.7. Nowadays is sitting at 115. Thanks to the weekend, it has decreased slightly. We have an aggregated reading coming from Binance Futures, Bybit, OKX, and BitGet that gives us a total of 1665 currently. We started with 4K, it got reduced to 1K, then to 2K, and on the weekend, 1600. Let's look at the defense on the upside. The people are placing 600 at 121K. That is the largest ask level, and the largest bid level is 115 at the moment. In between, we have some resistance in here at 119.7. Last weekend, they did the same. They had some resistance at the top. Eventually, they rug pull it and they allow the price to go into the end of Sunday to put new all-time highs. There is short-term liquidity on both ends. I will say slightly higher on the lower end, but not enough to say, well, we got a huge alpha in here. If we were to go sub 110, then we start talking about larger liquidity on the shorter term. 107 and 97 are the biggest buckets of the short term, but in the longer term, that bucket number 2 is definitely the one that can bring us that breakout with continuation to the upside. That one is centered around 125K. And the past 6 months and past 1 year on the heat map on CoinGlass is starting to show us this area as less attractive compared to the area of 83. I still think that if we wanted to go to 83, we need the general markets to puke big. It's not achievable having the S&P and the Nasdaq playing with putting new all-time highs pretty much every day. But if we got a correction of 7 to 10% on general markets, possibly we can get subs 110. I will reserve this 83 for a larger collapse of general markets. In the last 30 days, the biggest buckets, I will say this low-hanging liquidity here, it is being defended by that level at 115, but not all of it. For example, this large bucket is at 115.350, so that is doable without needing to break the 115 current support. 114, a little bit tougher unless they take out that support. Then we go with 110 and 107. After shorts being liquidated in this area, big, we're starting to see a little bit more of an equilibrium in this area. Both sides are being liquidated equally in the past week. After the liquidations of the 10th of July and the 14th of July, we started declining. This is how the order book looks on material indicators. As you can see, there is some levels of resistance that now on Binance specifically, this platform focuses on that, shows larger levels over 120. Purple Whales ended their show on the 14th of July. At that point, they took profits at 122, and that's it. They sharply declined their position and they went kind of sideways in this area. They are trading like pros. Basically, they took advantage of all there was to squeeze to the upside up until then. The CBD peaked with the highest level of 123. Since then, aggressive buyers are starting to flip into aggressive sellers, not by a lot, but they're taking a breather definitely. Let's look at where people are defending the price using the bid versus ask at different deviations. At 1% of the price, we have an equilibrium. There is same amount of limit orders above and below the price. From 1 to 5% deviation, we see a lot of defense. We are at 0.14 in the ratio. And if we go 5 to 10, we actually have more defense. So 5 to 10% above the price, people really are betting to take some shorts. Not so much with just 1 to 5. And 10 to 10, pretty far away from the price, we got decent support coming in at 0.13 on the ratio. And 20% above the price or below the price, we got a ratio showing that there is tons of selling pressure. Pretty interesting. I would have expected these three bands to be in convergence of either lots of selling or lots of buying, but you can see if we start filtering out, we get those ranges. So if we do 10 to 20, that means from 106 to 95k, that says that in this area in here, there are a lot of orders that are compensating a lot better the selling that there is in there. So if price was to come around here, there is good support. But in this area in here, it's a different story, at least between 5 to 10, where we can see is in the negative. If we now focus on what the top traders are using as an average leverage, we can see that this area in here has been dominated by speculators that are using over 15x leverage to short this area. And that is not gonna help, guys. That is gonna pretty much screw them all over together. When people short with that amount of leverage, the price goes against them. In this case, it's calling for a short squeeze, a move up. Since it's 15x, sometimes even if there's bearishness in the price and the price was to go down, it first goes up just 2%, it takes out most of them, and then it continues in the actual direction it wanted to go. So this could well be a move up first to take them out and then the move down, or simply just go up and liquidate the 15x together with other leverages too on the short end. Now we have a funding rate pretty much in the positive in here, and longs, you can see we have them at 46, a lot more than what we have in this topping area. This red area, we call it to turn into a local top over the week. You can see that we went into 123 and we retraced around 6%, so it was a local top for a lapse of time at least. I'm gonna skip this area in here because we cover it extensively with the different view, but there is not a lot of volume, so we cannot really take that serious the bid versus ask readings over a weekend. I mentioned something very interesting in terms of alpha, which is the open interest spiked at 110K, and I'm tracking this level closely because price tends to come back to areas where the open interest has increased just too mentally. Not always immediately, but is something to keep in mind for your positions and your risk management. In terms of fair value gaps, since around Thursday we haven't done that much. We are just consuming the very close fair value gaps. We took partially the one that ends at 121, but there is a leftover, and below the price we have this fat one that will be fantastic if you are in a short, of course, because that calls for a move fast into 111 thanks to the lack of structure that there is thanks to the fair value gaps. This week we had a layer 2 or 3 breakout on the DXY. You can see it in here, second consecutive week after the actual confirmation of the breakout, which was the previous week. So second week that we are defending this move up with the bottom information of the dollar. We'll see if we can achieve the actual target of $100. At least that will still keep us within this falling wedge, which is by itself in the price a bullish pattern that could call for potentially, if we break beyond the $100 back into 105. That is definitely not great for the markets. So we'll see if the pattern fakes out in here with the neckline and it starts putting a new low, which it hasn't done a single time. It's defending like a lion that level of 29 RSI on the weekly. So we'll see if it defends that. If we break that 29, then we got a invalidation that we were going really into $100, and possibly we're gonna actually test that support of 95. That is a long-term support that we haven't touched yet. We've been at 96.4, but $15 away from actually testing that level of important long-term support. That is the argument to say no, that bottom information is broken. We should at least still hit 96 in a way like this, come and test it, and from there see if we can really exit from the falling wedge. Tracking the dollar is important, guys. You're valuing your Bitcoin, you're valuing everything against the dollar, so a weaker dollar or a stronger dollar definitely has an implication to where your assets are going. Dollar as well is getting a rejection from the breakout on this green line, so it could mean that the next week we are gonna still be doing some sideways on the gold, or potentially take the lows of 59 and test finally our 21 weekly, which is what we were calling with the breakdown, but we haven't done it yet. And VIX, I really wanted to take a decision VIX, but it's not giving me that. What I want is a confirmation of the breakdown. We do have a confirmation, by the way, but it's moving just sideways in here, and for some times during the week it's been above the trend line, defending a potential reclaim. A reclaim of the VIX in here could spell bad things for risk on assets. An expansion in this direction could be really hindering the performance that we've seen on general markets. But I'm not getting that reading yet, right? We continue for a second week just getting the same stupid reading of the RSI to the sideways. So we're gonna have to delay saying anything about this. And the Nasdaq has had a pretty decent week with new highs, together with the S&P just going sideways, defending the levels. A little bit better than actually sideways, just roughly taking the previous week high, I will say. In terms of CME, you can see that we took number 1 right before closing Friday. That's great. We just pinched that level, and if we had another rally by the end of Sunday, just like we did the last week, you can see that we're gonna leave a gap precisely where we close the gap from previous weekend this Friday. And that's why I'm leaving this number 1 in here, because pretty much guaranteed we are gonna get a CME gap around those levels. The question is whether the price is gonna rally with the rest of Sunday, leaving the gap again below the price, or if we're gonna move into the gap number 2, leaving a gap to the upside, allowing us to chase that liquidity to the upside in that case. Notice one thing, that if over the weekend we go into the bucket number 2, which is a 2K gap, and we either cross through it or we pinch and we come back up, gap by the end of Sunday, that does not count as filling the gap. On a weekend, you cannot fill the gap. To fill the gap, filling a gap means that the CME Chicago exchange is open and the orders that couldn't get hit because the exchange was closed eventually get hit while the market is open. If it's closed, it doesn't do anything to the gap, the price on Binance while Chicago exchange is closed, passing through there. We could get something really odd if we go lower. We could build an overlapping gap adding up to the liquidity that is located in the same location. Interesting. The gap on Binance ends at 113.6. Below we have gaps at around mid-90s, and way below we have 6 gaps. In terms of Bitcoin status, I have changed a few things. We broke the global support again. We reclaim it. We keep doing that on the 4 hour. It's all over the place. Pinch, reclaim. Pinch lower, reclaim. Pinch lower, reclaim. Very difficult to understand, but that is pretty much what happens when we are having sideways. July CPR second resistance is still holding. It's incredible the performance of CPR resistance this month. I'm gonna look into that as well. And on the daily we have a breakdown, but again, breakdowns over the weekend really don't matter that much. You can see how many times we pinch this level and we are just goofing around with that support. So I'm leaving the line there. I could move it in here, but I'm just gonna see what happens before I move it. We also did the same with the top in here with the expanding channel. I think it's time to do something categoric. We're gonna update this as I'm recording. I'm gonna move this line like that, okay? This makes a lot more sense. Let's move this anyways. Let's call it a squeeze. And let's put support in here. Let's bring this line there and say we need this to break out. Now that we have fairly move a decent amount, we could be looking for an exit from the squeeze, whether to the downside or the upside. Let's update those levels, 49.71 and 44.52. So since it's a squeeze, it's gonna look very squeezed in the price as well, right? We got our resistance of 118.100 and below the price 117.500. We already took the fair value gap in here. So on the 4 hour, I think it's worth monitoring any move in here. The closer we get to the end of Sunday, the more I believe the move. If it happens too early in Sunday, it tends to get reverted, faken out or whatever. But so far we've seen in the past price action that if a move starts late on Sunday, we carry on that for a little bit longer. At least in here, we managed to put a new all-time high. And after the all-time high, we have been defending the CPR resistance. So we took that resistance and we turned it into support at 117.6. Now that is in confluence with our support, which is at 117.6. We got 2 levels in confluence, CPR and 4 hour RSI support. And on the daily, we have a breakdown, okay? But unfortunately, the breakdown happened on Saturday. So again, just like it happened around here, we have a breakdown on Sunday into Monday, which I say, I'm not sure I'm buying the breakdown from here. We probably are going to still break out. And you can see that we still broke out into here. So watch out for this breakdown. Entering a fresh short there might not necessarily play out because of the weekend. Indeed, it could reclaim 67 and still go into the next leg up into 85. At that point, 85 is currently priced around 137K. It's in line with the extension of 1 relative to this rally that we put in here. So if we did that move starting from this low, that gets you into 136 too. So 137, 136. If we reclaim that orange, which is now 118.972, it's a moving target. If we can reclaim that orange, that will be really bullish. It will be really similar to the fake out that we did in here. Now, if it is a genuine breakdown and we cannot manage to go back above 67.57 or 119 or 120, if some moving target is going to move, then we could fall into the next support, which is 42. 42 is located at 109.700. 109 has this liquidity, but really what stands out at 106, which we can also see on trading different model. So if we get into that 109, potentially we could weak into this one and take it as well if that plays out. After all, yeah, this is bullish. We are just going sideways and everything. But in here, we did this move down. We went back up into golden pocket. We got rejected. We broke down in here. We started the weekend and going sideways. So we haven't really respected the technical breakdown, which was to get into 113.5. We broke down and we're not going anywhere. We're just going standing still at 117. So let's wrap it up. So far, we are holding key support and we are having bullish consolidation right underneath a huge long-term liquidity pool, the biggest one we have left. Of course, this was way bigger. There's just 1/4 of that, but it might still be interesting to market maker to carry on slightly higher. And the fact that we have done that bullish consolidation tells me that there is a huge appetite to do that. My reading of the 80,000 that hit the exchanges is that it hasn't been yet distributed. So my thesis, and slap me in the face or tell me in the comments, and that helps the channel as well if you agree. I feel like they are depositing because they want to distribute at a higher price. They have done partially that, but not yet in full strength. So I'm kind of thinking that we can get into 2. That is my reading. People don't care about my short, but some people care, so I'm still gonna tell you. Since that is the case, I'm interested to average up my short in any of these areas around here, 2, 3, or a potential extension into 150, because I really want to take advantage of that dip after that. Build my position towards a bear market and stuff like that is in my head, and I'm taking it easy. I'm not gonna aggressively short this level and run out of cash for 2, 3, or an extension of 160 and all of that. Guys, stop using your shitty exchange and get a decent exchange. This exchange is called 2bit. It was built by the minds of Bybit. The best people in Bybit form this exchange and build it with their own hands, so you get the chance as well to opt out from having to do KYC. Yeah, this exchange is supporting both KYC or non-KYC. So that means that in just seconds you deposit crypto and start trading with leverage, with over 1,000 trading pairs, with any leverage that you may want to use in any language. And even before you deposit, they are already giving you $50 to trade, risk-free. Now, if you deposit and you start piling up on the volume, trading volume, you can get up to 30,000 in rewards. Of course, the link is in the description if you decide to open the account and support the channel. Big thumbs up for doing so. That pays the salary of the people helping me to edit this video, to put out all the content, maintaining the articles with summaries, every single video on my Patreon. Yeah, there's a lot of work to do and I need help with that, and this is the way to support the channel. Thanks so much. I'll see you in the next one. Enjoy your weekend. Now you can go and touch some grass, by the way. You got my permission. Bye bye. See you on Monday. Yeah, bye bye.